Hey, what's going on, everyone? Rushab over here. Many of you know that I have my own education technology company where I help business professionals superpower their business mind. And I do this by a framework I created called the Business 360 Framework. Essentially, I just take all the components of business and I organize them into buckets. The reason why this is so effective is because it helps us simplify the way we look at business and then we can connect the dots a lot easier. It's why companies hire my consulting practice so that I can help them with their financial and operational strategies, or why business schools bring me in to teach the framework to their students because it helps them land jobs. And I also use it as a foundational piece on my online education courses where I'm helping entrepreneurs or business professionals upskill themselves. And what I wanted to do today is something that I call what would you do? It's essentially thinking like a CEO. We're going to put our CEO hats on and we're going to look at a company that's very popular and quickly show you how you can think business using at least the first phase of the Business 360 framework. How thinking business can help you understand what's going on. And as business professionals, whether you're working in a company or you're an entrepreneur, it's very important for you to be able to think about business in a simplified way. So, what I'm going to do is I'm going to share my screen. Just give me a second here. I think everyone can see that. And what you see here is what I call the 6 board members of business. It's the first phase of the Business 360 framework. Don't worry about what each of these buckets are because you're going to get more familiar with them as I run through this example. The example we're going to choose is Peloton. And we're going to ask ourselves what happened to Peloton, right? We're going to try to figure it out. It's going to be very quick. I have all the answers for you. And I'm going to show you how I think business and why this is such a helpful way of looking at business. So, first thing is we're going to look at where Peloton was at the height of the pandemic. At the height of the pandemic, Peloton had a stock price of $170. All right. That was their stock price. And they had a market valuation of $50 billion, a market cap. Essentially, that's what their company was valued because their stock price was so high. So, if you don't know what Peloton is, we're going to hop over here to the product and service bucket. They offer exercise equipment, stationary bikes, treadmills, which I'm just going to write TM, and then they have subscription content. And what this is basically if you subscribe to them, you have exercise instructors that you can take classes virtually while you're on the equipment at home. Now, what happened was in 2018 and 2019, Peloton had gained a lot of traction. So we're going to go back to the profit structure side. They were pricing their bikes at about $2,000. And I think it was $4,000 for the treadmills. And I could be wrong, but it was somewhere around that. And I think it was $40 a month for their subscriptions for that online content. Now, you don't need it. You don't need to pay $40 to use a Peloton equipment, but that's what they were pricing it at. So what happened was the pandemic hit in 2020. And this is what we call an outside factor. The pandemic came and it shook a lot of businesses. So Peloton actually found opportunity in here. And the reason why is because customer demand. So we're going to go to the customer bucket here. The customer demand skyrocketed. And the reason why is because they couldn't go to gyms. So customers are like, well, we need exercise equipment. And for all of us that were probably shopping exercise equipment during the pandemic, saw a huge price increase on all equipment. This drastically helped Peloton. Their demand went up, and that means that they need to meet the demand, right? So Peloton looked at their strategy and they're like, okay, what are we going to do? We have high demand. So our strategy is going to be let's meet the demand. Now, that is a right strategy. Where Peloton got it wrong is that they thought demand will be there forever. But that's going to be later into this session. Peloton said our strategy is going to meet demand and we're going to do whatever we can. One of the things was there were supply chain issues, right? To manufacture, to get parts. It was happening to everyone, and it's still happening today. We're still feeling the effects of the pandemic. So Peloton needed to increase their supply chain. Please excuse my handwriting, everyone. So Peloton needed to increase their supply chain. And part of their strategy was to put in a $400 million facility, right? So they wanted a new facility, and they looked at their capital position, which is essentially their wallet, and they had to see, do we have the money? Having such a high valuation, they did, but they had a cost of $400 million for a new facility. So what happened then is that in 2021, we're going to just write in 2021 over here, they had their first ever $1 billion quarter in revenues. That was a huge milestone for them. And they were basically riding a huge wave. But eventually, the pandemic started to recede. And that means that gyms were opening up, right? So basically, gyms were now open. Also, people wanted to get out of the house. So customers, their demand was starting to go down, right? I don't think we need this line here anymore. So customers' demand started going down. And then there was a couple of other things on the outside factors. Some TV shows showed people dying or getting injured on their bike, which was negatively affecting brand. So Peloton's brand took a hit, right? And I know brand spelled or looks very bad with my handwriting. Also, there were minority employees that felt that they were not paid well or paid according to industry standards. Minorities felt inequality, especially on salary. Now, what happens is when there's negative brand, there's low revenues, investors get a little weary, right? And so stock prices start to go down. And so that's what started happening to Peloton. So what we're going to do is we're going to just take a quick eraser here, and we're going to just erase all this. Now their stock price is starting to go down. And they decided to lay off 20% of their workforce. And they also went on a hiring freeze, which I don't have to write, but you get the point. This isn't good. Keep in mind, they still have a $400 million facility. They essentially overestimated their logistics. They thought that demand is going to constantly increase, but it didn't. And they didn't realize the psychological impact of people staying in their homes for almost 2 years was going to have, where people just felt they need to get the heck out of the house. So that's what happened to Peloton. Well, where are they today, right? So what we're going to do is we're going to, instead of erasing all this, let's go to today, right? Let's ask ourselves that question. Where is Peloton today? Because of all this negative brand and low revenues, they essentially fired their CEO and got a new CEO. Their stock price is hovering in the $20 range. Okay, so stocks, and I don't, honestly, I didn't check it today, so it could be better or worse. But when I last checked, it was in the 20s. Now, whatever negative brand perception they had, if you remember, it was in the outside factors, they still have a strong brand, right? People still view Peloton as a quality product, right? So their Peloton brand is still strong. Now, what they did was, what's interesting is that in all the data they have, their customers had a low churn rate. What does that mean? Well, that basically means that all the people that were buying into their subscription content, very few canceled those subscriptions. That's amazing. Very, very low churn rate. So they still keep those customers. And so what I would suggest for their strategy here is to reward their current customers, right? Stay with current customers, and all abbreviation here. And I would also say that they should prioritize their subscription content. So if we look in the product side, they have subscription content, and that should be prioritized. The more you do with the subscription content, the more you have for a total addressable market, which is called TAM. They've already lowered their prices. That's another thing that they've done today. So their equipment prices have gone lower. So now they're getting more to that TAM, that total addressable market. Their equipment prices, let me write price here actually, and then I'll put the colon there, is lower. And they've also introduced something that's very interesting. And Apple's actually thinking of doing this for their iPhone, which is leasing their equipment. Again, that's going to get people who can't afford a $2,000 or $4,000 thing to just basically rent the equipment out and pay monthly on it. So they're going to lease out the equipment. All this is basically damage control. They had a very bad end of the last year, and this is the strategies that they got to put into place. They went from a $50 billion market cap at the height of the pandemic, and today they're about at $7 billion market cap, which means that's what they're worth today. Now, they can continue riding the wave they have, but there's rumors that they may want to sell. That may be a strategy of theirs. Let me put that header there. So maybe a strategy for them is to sell the company. I'm not saying that they should, but companies such as Amazon, Nike, or Apple may be good suitors. I mean, Apple in reality, I don't think will ever go for it because they already have a good thing going with Apple Fitness. And they don't need the operational headaches that you would have in manufacturing under operational functions. So when we start thinking like CEOs, right, what we just basically did in a very short fashion is we looked at where they were and where they're today. And there's a lot more we can do with something like this. And it gives us a way of looking at business in a more organized way. This is exactly what I've been doing when I do these sessions at business schools. This is what I do with entrepreneurs, with my consulting. And I actually have a more in-depth version of this framework, still a one-pager, but it's actually broken down into many more buckets. That's amazingly helpful when you're just trying to plan, strategize, and see where you're at. So I hope this was helpful of how we can all look at business. And, I'll continue to do more of these because a lot of people have asked me. Case studies are basically the best way to learn anything. Thank you for taking the time to watch this video, and we'll continue doing more of these.